So the best safe haven is gold. I say physical gold, bullion, coins or bars, and silver. It's not digital. You can't hack it. You can't steal it, and you can't freeze it. They just put it in a safe place. So, but Americans don't really get gold. They don't really understand it. So, yeah, I think it's just going to be a question of frog hopping from lily pad to lily pad, looking for a safe place. The other scenario is that the government just throws in the towel and says, okay, all deposits are guaranteed in unlimited amounts. And I knew people who were trying to get $8 billion out of Silicon Valley Bank on that. They sent the wire instructions on Thursday night. One guy I talked to said, hey, Jim, from Thursday night to Sunday, we didn't know where the money was. We sent the wire instructions. We were trying to get it out, but we didn't know what the outcome was going to be, whether it was short or not, wire sent or not. And then Sunday night, the Fed and the FDIC came out and said, all good, we're going to, business as usual, open Monday, and it's all good. And he said the money went through. But that was what people were facing, and they'll continue to face. I mean, the banks you mentioned, I don't know what their deposit flows are right now, but my guess is they're shrinking fast. People are getting their money out, and so you might just have to give a generalized blanket deposit insurance protection, and that would stop bank runs in theory. But then now you basically nationalize the U.S. banking system. You look like Argentina. So there are no, I guess the way to put it, there are no good outcomes. Either there's a catastrophe worse than 2008 that starts to look like 1931, 32, or the government offers so much protection that they've de facto nationalized the banking system. One just quick note I would add, I think when it comes to banking crisis, I'm a little bit of a magnet for trouble. I remember the Hirschstadt Bank collapse in 1974. That was a foreign exchange crisis. But through the early 80s with the Latin American debt crisis, and the late 80s with the S&L crisis, and then 1994, the Mexican tequila crisis with the collapse of the peso, 1998, long-term capital, dot-com, 2007, 2008, we talked about that. And today, and when, October 19th, 1987, the stock market fell 22% in one day. Not a year, but in one day. So I've been on the front lines of all those. But the one thing I've noticed is that each crisis gets bigger than the one before, and each bailout is bigger than the one before. And the question I'm asking as an analyst is, are we at the point where the crises are so big, it's bigger than the Fed? In other words, we're not really talking about bailing out a bank or a sector. People lose confidence in the dollar itself. And we do seem to be heading in that direction.
All right, Jim, so you make a great point. I'm glad you brought up the dollar, because obviously dollars had one hell of a year into the end of last year, pullback since 2023 off that high. But I'd love to get your view on the dollar, and if the reason you believe gold is going to be stronger, is a weaker dollar one of the catalysts you're looking at, Jim?
Yeah, I mean, you can think of the dollar and gold as kind of two sides of the seesaw. One's up and the other one's down, and then vice versa. When people talk about the price of gold, it's really the dollar price of gold. You can think of gold by weight. So, a strong dollar usually means a lower dollar price for gold, and a weaker dollar means a higher dollar price for gold. And we've seen that dynamic play out in recent months. It's not the only driver of gold. It's one of them. There's a good old-fashioned supply and demand. I think in a bank, sometimes you see in a financial panic, gold and the dollar will both get stronger. The dollar will get stronger against other currencies, and gold will get stronger measured in dollar terms, because there's a flight to quality. Get me out of, yen or yuan or rubles or euros or whatever else it might be. Get me into treasury securities. And the thing about a flight to quality, it plays out in security space. What you want to get are really treasury securities. You want to get really short-term treasury bills and treasury notes. But to do that, you need dollars. If you're a foreign banker or foreign investor and you want to buy some 4-week treasury bills, you got to get dollars to pay for them. So the rush into safe treasury securities creates a demand for dollars. And then at the same time, gold is another saving. So sometimes it's the seesaw. Sometimes they can both go up at once. I guess what I'm really saying is that I see gold getting stronger. The dollar is very much in the news. It's one of the questions I get most frequently. You talk about Ukraine or China or inflation, all that, but it comes back pretty quickly to the dollar. But I find there's a lot of confusion on the topic. And the confusion comes from the fact that everyone talks about the end of the dollar, the dollar is going away as a global reserve currency, et cetera. But people don't distinguish between the role of the dollar as a payment currency and the role of the dollar as a reserve currency. And those are two very different things. There's some linkages, but a payment currency, basically, if I want to buy goods and services from you, and I tender some form of currency and you're willing to accept it, and you're confident someone else will accept it from you, that's a good payment currency. It could be dollars, it could be euros or yuan, or it could be Russian rubles or Brazilian reais or anything, as long as people are willing to accept it, have confidence in it. And, when we were kids, we'd use baseball cards and bottle caps. So almost anything can be a reserve currency. You need payment channels, and there's a little more to it than that, but that's basically it. A reserve currency is a very different thing. First of all, we don't really have reserve currencies. You go to the People's Bank of China, they don't have $100 bills stacked up in the basement. What they own are U.S. Treasury securities, which are digital, by the way. The last paper Treasury security was issued, I think, around 1979. So what they have are actually securities. So when people say reserve currency, what they really mean is securities that hold your reserves denominated in a currency. So, of course, Treasury securities are denominated in dollars, but they don't have actual dollars, in a bank account or a physical form. They own securities. Now, as far as the payment currency is concerned, that's relatively easy to displace. This is what all the news is about. So Saudi Arabia is talking to China about accepting yuan in exchange for Saudi oil. Brazil and China just negotiated a major agreement where the Brazilians could pay in reais for Chinese exports, manufactured products, semiconductors. The Chinese can pay in yuan for Brazilian, sugarcane, soybeans, aircraft, Embraer, and oil and other products from Brazil. The BRICS, that's Brazil, Russia, India, China, South Africa. About a third, which is close to half the population of the world when you throw in India and China in the same group. They've now rebranded themselves as BRICS Plus. So when they have their meetings, they're inviting Iran, Turkey, Argentina, and a lot of large countries, important countries that were not part of the original BRICS. They're working on a new payment currency, and that we're likely to see a big rollout of that this coming August. Don't know exactly what it'll be. They're working behind the scenes. It could be commodity backed. It could be gold backed. Because I'm getting a lot of inquiries like, hey, I'm getting my money out of the banks, or I don't trust the banks, or the U.S. Treasury, they're playing games. What can I do? And I said, well, in terms of the system, there's nothing you can do. This is a lesson that was taught to me. I was a 27-year-old starting out banker at Citibank back in the day. But Walter Wriston was the chairman, and Walter Wriston was the CEO. He was the second greatest banker of the 20th century. So number one, I'd give to Pierpont Morgan, but I would give Wriston number two. But he was very open, and I was a senior officer. I got to hang out, and I had a conversation with him once. I just seen this movie Rollover with great Jane Fonda, Chris Christopherson, Hume Corona in 1980. But it was about what we're talking about. It was like a Silicon Valley Bank situation that spun out of control, and the financial system collapsed and all that. But it started with the Arabs taking their deposits out and buying gold, and that was kind of happening. And it's what was going on with Silicon Valley. So I said, I was CEO. I said, Mr. Wriston, I said, what's to stop the Arabs from taking all their money out of Citibank and buying gold? And he said, nothing. He said, but somebody sold them the gold, and they got the money, and they put it back in the bank. And it could be a different bank, but they lend it to us in the euro-dollar market. In other words, it's a closed circuit. The money doesn't go anywhere. And that was like, that kind of hit me right between the eyes. It's like, actually, you're right. An individual can get the gold, but you're paying somebody else the money. They're putting it back in the bank. And at the end of the day, the money never escapes the system. It is a closed circuit. So the key ingredient is the interbank market, banks lending to each other, except now we have the Fed lending to all the banks. But that doesn't stop an individual from taking her money out and buying gold. And, I'd never do anything 100%. I've always recommended a 10% allocation, season to taste. If you want 5%, fine. If you want 20, it's on you. But I think 10% is the right amount. And it's not bank money, and physical. Take physical custody, put it in a safe place. Like private vault. Don't put it in the banks, because that's the first place the government will go. It's all legal, by the way, but it's your money. But it's not digital, and so you can't freeze it, you can't hack it, you can't steal it. It's just